welcome to today's episode of FinTech Fun Talks. We have a very exciting guest. And for those of you just joining the podcast, we are Copper Canvas Ads Agency, and we specialize in helping those in the FinTech industry scale their revenue within a 12-month period. So today, our guest is Saumil Bhansali. Saumil is the Enterprise Software Manager for TH Global Capital. Welcome, Saumil.
Thanks, Christy. Thank you for having me on the show.
Yeah, so happy to have you. So let's jump right in. I would like to know a little bit about your past, your experience in the fintech industry, and what brings you to the point that you are at today.
Sure, absolutely. So I think, Christy, if I can start off, I'm an engineer by qualification. I started working in the tech industry for a number of years. Got interested in finance. So, there was synergy between finance and technology, and that's how I got interested in fintech. I wanted to switch careers, not focus on core technology only. So, pursued my MBA and then did my CFA. And then started working in banking. So I've been in banking for the past 8 to 9 years. Focus extensively on software, and fintech is a big part of it. So I've worked with companies predominantly in the tech sector and help them through their journey. So when they're looking to grow, if they're looking to raise capital, or if they're looking for strategic mergers and acquisitions, or if they're looking to go public, we work with companies and help them fulfill those aspirations that they have.
And those are things that I'm sure many of our listeners will be interested in and have to keep in mind for their futures in their businesses.
Absolutely.
That's great. Thank you. So one thing I wanted to talk to you about, having been in the industry for as long as you have, the fintech industry is very large. There are very many players, and I'm wondering if you feel like it has reached a saturation point, or is there still room for innovation?
So, Christy, you're right. I think since the start of PayPal in the late 1990s, we've had a 2.5 decades of exponential growth in the fintech industry. So, you know,
Mm.
and it has grown significantly as well. So, there are pockets which might seem saturated, but then there is still argument to be made for a lot of potential still further ahead. This is predominantly driven by the technological innovation that's happening. The consumer behavior is changing, and because of that, the regulators are always kept on their toes. So the regulatory environment is changing as well. So the combination of these three keeps the industry pretty dynamic. You still have a lot of unmet needs which are out there. If you look at the developing world, there are a lot of individuals, a lot of segments of customers which are still do not have access to inclusive financial payments or financial access, right? So that's where
Yeah.
fintech can play a pretty big role. That's where I think the traditional fintech players have not been able to meet the need, and fintech can play a big role in terms of closing that gap. We are seeing a lot of emergence of new technology, AI, ML. We've been hearing a lot about AI, ML over the past 2 to 3 years with OpenAI. So that leaves a lot of space for innovation and transformation for the industry. You have technology like blockchain. I think we've still not seen a huge potential. That has a huge potential. We've still not seen the application of blockchain or cryptos or those kind of technologies in fintech. And then as the consumer behaviors change, the consumers become more and more demanding. There is a lot of scope for hyper personalization as well. There is still a lot of scope for transformation, and the industry remains as dynamic as ever.
Yeah, I like that. It does, in a lot of ways, feel like it may be hard to have your voice heard in the industry just because there are so many offers, but there is always opportunity to, like you said, maybe customize for what different institutions and individuals need. There's innovation to continue streamlining things. We've made a lot of progress, but I'm with you. I think that there's still a lot that can be done. And I love to see the disruptors coming in and seeing the types of unique technologies and advancements that people come up with.
Absolutely. It's a dynamic space. And then, just when you think there's probably nothing more, new technologies open up. So, you have new avenues coming up.
Yeah. Exactly. So, from your perspective, are there specific challenges that are keeping us from making the progress that we need to? Like, I'm thinking specifically, your mention in crypto, where I feel like we've kind of been stuck in the same place for a long time. So, that's an example, but there may be some other things that you feel like we've got some roadblocks that need to be moved out of the way before we can really make some big steps in some of these spaces.
Yeah, so roadblocks are always going to be there. I think the payment industry and the fintech industry, or the traditional payment processors or the traditional finance players, regulation has generally been the payment industry has generally been looked as late adopter of technology, and that's when the tech players are specifically focused on finance. So that's how the fintech term came in. They started disrupting the space. So, but the regulators are playing their part as well. They slow down the adoption of technology, but I think they lay out the guardrails where the customer, the focus on the security and the well being of the consumer is taken care of. So their data security, data privacy, I think that's a very hot space right now with so much of data being thrown around or being shared by enterprises in the fintech ecosystem. It's very critical to ensure that data privacy is taken care of. Security, fraud detection, and these are the things where are not very visible to consumers when they use the technology. Then these a leakage or two here and there can disrupt the entire trust that the industry has built. So I think there are a lot of aspects in terms of regulatory changes that are happening. Technology can drastically improve that, so we're playing a part there.
Thank you. And now you mentioned earlier a bit about AI. And so I wanted to ask you, what role does AI and machine learning, I feel like they kind of go hand in hand. What role do those two play in fraud detection and transaction optimization?
Yeah, so if you look at AI, right, AI has brought the ability to analyze or transform or manage a massive amount of data in a very short period of time. So, it was called big data, but then, like with the advent of OpenAI and, being able to analyze a huge quantity of data in a short period of time has, opened up new avenues, especially in, fraud detection and transaction optimization. Now, if you look at fraud detection specifically, AI can help analyze huge amount of data. If there is any anomaly or any outlier behavior, consumer behavior, an alert can be created. So that can be looked into what is happening. Any indications of fraud or any misbehaviors can be detected early, and you could use it for predictive modeling as well. So the models can be trained on the historical fraud data that was there, and then it can help prepare the systems for what the adversaries might be thinking. So it can help you predict and stay ahead a few steps as well. And besides AI ML, there are a lot of other adjacent technologies which are pretty helpful as well. Deep learning, natural language processing, or graph neural networks. So these kind of technologies can really help, enhance that frontier of fraud detection. And if you look at transaction optimization, similarly in concept where, helping or being able to analyze huge or massive amount of data can help businesses, predict what their demand might be. It can help detect fraud, but then, it can also we hear concepts like dynamic pricing and also anticipating demand in advance, the seasonality and everything. It can help companies prepare better in terms of what to expect from customers. All that guy can help. Guy and ML can play a pretty big role in all of that. Generally, if you look at it, they bring in additional security, or they help drive operational efficiency, and then they also help provide unified customer experience. So
I like these things that you've highlighted that they're all really positive and they all enhance our quality of life. As a consumer, I think about the fraud prediction and the ability for it to be able to hedge that in a way that maybe we as humans would not be able to as quickly is comforting to me. It helps me feel confident in being able to use my different payment methods with confidence.
yeah, but you can't relax, right? The adversaries, they have access to the same systems as well. So there is always always playing catch up to it. So you always need to stay one step ahead of that.
That's true. I've worked in the payment industry for 20 plus years, and I'm always amazed at how well our tech teams are able to stay on top of things because there's just a lot of people trying to breach the data and access that personal, private identifying information. So, yeah, it is a constant battle.
And that is why you're seeing a lot of regulatory focus on data privacy as well. That's central. We've seen GDPR, we've seen data centric regulations across the world. So there's a lot of focus on consumers owning their data and being in charge of that. So any leakage, entities or fintech companies or whoever the businesses are, they have to take it seriously. The cost of not being able to do that are severe. So it could put your survival at stake. So it's imperative that businesses understand that as well, and they manage the consumer data. It's not the businesses that own the data, it is the consumers data. So you've got to be very careful in terms of how you manage that data.
It's a big shift from where we have been because the ownership has been on the different entities that hold our personal information. And so to shift that over to the consumer in a way that provides a level of ownership where I feel like I have some control, but it can be a little nerve-wracking too.
Absolutely. And I think consumers are getting more educated as well, from be completely unconcerned about, where their data is. We've seen data breaches, we've seen the consequences of, how severe the consequences can be. So, the consumers are getting educated as well in terms of, how critical the data is. So they've been more careful. They've been more educated, and they are voicing their opinions pretty strongly as well. So it is their data, they own the data and not the businesses. So.
Let's jump into the B2B2C model and how that differs from a traditional B2B or B2C payment system. Can you give us a quick overview there?
Sure. So if you look at a B2B2C, it combines both the elements of B2B, which is business to business, and B2C, which is business to consumer. So it creates a lot of dynamics which are not there in B2B or B2C. So, essentially what is happening is that, it is enabling businesses to collaborate with each other to provide a product or a service offering to the end consumer. There are different parties at play here. So, I mean, when you look at an offering of this size, when multiple parties are involved, there could be significant challenges as well, but there are opportunities to collaborate as well. So, you have the intermediary business, you have the end consumer, and then you also have the fintech or the payment processor, which is there. So, it's a combination of three. And then you could have opportunities where you could leverage each other's strength, but then you could also have challenges where, there are conflicts of interest as well. Who owns the customer relationship? There is only so much profit that can be made, right? So how does the profit sharing work? And then technology plays a pretty critical role in terms of how enabling B2B2C. So you've got to get your systems up to date. Your systems need to be able to talk to each other. The systems between multiple businesses, they need to be synchronized as well. You can't have non-coherent data across multiple systems. So it requires a lot of collaboration and a lot of operational efficiencies to be taken care of before for providing that seamless experience for the customer. And then the customer remains a core focus, because if you don't provide a seamless experience, all the effort that you put in comes to naught. So dealing with all the technological complexities and all, and yet being able to provide that unified or simplified customer experience, it brings in a lot of challenges. But then it's a pretty dynamic space where we've seen a lot of innovation happening. I think it has broken down the traditional finance system or the payment system, where traditional players have had to open up their traditional business models, and it has led to a lot of collaboration as well.
Yeah, I'm sure it has. As you mentioned, some of the innovation that you've seen, what are some of the most exciting things that you've seen recently?
So I think if you look at B2B2C, I think what I've seen is, something called embedded finance, where, consumers interact with a business of their choice, but then the payment processing or the transaction is carried out to the third party. Now, this is different from a white labeling this thing, because, the consumers are aware that, they are interacting with a third party to complete their transaction. So I think we've seen a lot of innovation there. And that what that has done is, it has disrupted the traditional payment industry. It has enabled non-financial institutions to offer financial services and offerings to their consumers. So that's played a pretty big role in terms of waking up the traditional payment processors as well. They've seen their market share getting picked up by next generation technology companies and all. So they've had to wake up, they've had to embrace and adapt technology as well. So you see the traditional players and they are not looking to, disrupt the system. Rather, they are embracing it, and then, they are adapting technology to evolve to the changing needs and the changing reality. So, they've opened up their platforms as well. We've seen a lot of API connections. Their systems are talking to each other, and, rather than relying on transaction-based fees, we're seeing revenue models evolving as well. So, our traditional players have started providing more value-added services like, security or, analytics or, those kind of things on top of that. So, it's created an entire new dynamic ecosystem where I think there's not one player that can do it end to end, but it's about creating that collaborative partnership environment where, rely on each other and work within the ecosystem to deliver a unified customer experience.
That is a positive direction that this innovation is going. And I've heard a lot about the embedded payments and how people are moving more and more toward that, and that it does create a better end user experience. Yeah. I would like to get your input on valuation, sustainable business models, and capital needs. What key factors are driving the valuation of payments companies today?
Valuations again, and I'll put a caveat. Valuation is as much of an art as it is science. So, like any other industry, there are various drivers of valuation. So, so first of all, the market potential which is there. If you look at it, what's the market potentially? How advanced the technology is, and then, if you, from a finance perspective, if you look at it, the scale of the business, the growth of the business, the profitability is what primarily drives the valuation. But then, if you look at the qualitative aspects of it, it is, how interesting the industry is, how disruptive yeah, the technology is, or, what's the competitive landscape. So there are several factors at play which, drive the valuation. And then again, of course, you can't deny the macroeconomic environment as well. The companies have been doing the same thing, but changing macro environments have had unparalleled effect on the valuations as well.
Do you feel like access to capital is becoming more challenging for the fintech industry, specifically given the economic environment today?
Oh yeah, absolutely, and I think and that's a common theme all across, not specifically to fintech as well. Fintech
Okay.
is a very very fragmented industry and a very competitive industry, so probably the effect is slightly more. But then the current environment that we're in, I think back in 2020, 2021, people were used to low interest rates, and it was kind of said that it was
Mm,
free money out there. But the current environment is not so. We're faced with rising interest rates or higher interest rates. We have this tariffs which are there. So, a lot of, and, like the investors have reset their expectations as well. The investors are not looking at only growth, but they are looking at, driving profitability as well. They are looking at sustainable businesses as well, so that long-term potential or, proving your capability over a long period of time, that needs to be there as well. In that changing environment, it certainly has become a little more challenging. But then, the right company for the right company in the right space, there's nothing stopping them. So, I think this is the time where you separate the good from the ordinary.
yeah, that's a good point. There's been a lot of mergers and acquisition activity in fintech and payments. Do you see that consolidation continuing?
Oh, yeah, absolutely. In fact, like just last week we saw, Global Payments acquiring WorldPay for about 25 billion, which is, one
Hmm.
of the largest M&A in the space. So, we see it is a very strategic decision making in the journey of the company, and we kind of, see that happening on a continuous basis. So, there are several factors which drive M&A decision making. So, as long as the technology keeps evolving, you either acquire for consolidation, gaining market share or getting access to geography or a segment which you don't have, or gaining access to technology. Now, gaining access to technology, we've generally seen innovation or the new frontiers of technology is being adapted by smaller players. So, you see new and new companies coming up which drive the adoption of new technology, and they drive a lot of M&A. So, a lot of larger players look at smaller company in terms of where the industry is moving, what direction the industry is moving in, and you will continue to see a lot of M&A there. It's important for the larger players to continue investing and continue acquiring newer technologies. And it is important for the smaller companies as well. They don't have the resources to, it's a fragmented industry. It's difficult to differentiate yourself. So it's important for them to, if they get acquired by a larger player, they have access to resources to fulfill or realize their full potential. So it's a win-win situation for everyone. And I don't see that slowing down. We might see a pivot here and there according to the economic cycle, but I think it's a normal activity that happens through the life cycle of different companies.
As long as I've been in the industry, I've been a part of companies that have been acquired several times. And so they get acquired by a bigger company and then a bigger one and then the biggest. So it does just seem to be this continuous consolidation. And in all honesty, the experiences that I have had, most have been really positive with the acquisitions. I know that there's always a bit of a disruption in business and in personnel and that type of thing whenever that happens. But overall, the ones that I've been a part of have been successful and have been a generally positive experience. Thank you so much for your time today and your input, your experience and advice. We really appreciate it. Thanks again for joining. Thanks for watching our podcast today. I'm Kristen Nielsen. I'm the owner of Copper Canvas Ads Agency, and we partner with fintechs to help them scale their business within a 12-month period. I've been in the industry for over 20 years, and I've seen how saturated the market can be, and therefore how difficult it can be to make your business stand out in a sea of other fintechs that may look similar or maybe even slightly different. But how do you make yours stand out? How do you get your message to the right people and those with high buying intent? That's what Copper Canvas Ads Agency is here to do. We are a growth partner, and we take a deep dive into your business to really understand what your strong points are, where there may be areas of weakness, and how we can fill those areas of weakness and create a plan to move forward in a strong way and really scale. So if you are interested, simply go to our website, coppercanvasadsagency.com, and schedule a time. There are buttons right there on the front page for you to book a time, and then we'll love to talk to you and see what we're able to do together.